Hi everyone, welcome to this channel. I am Michelle. Thank you for joining me here. Today we are going to have a candid conversation about the relationship between the Board Audit Committee and the internal audit function. Before I begin, please feel free to subscribe to this channel on the notification button and watch this e-learning video until the end, as it is imperative to us in order to achieve 4,000 watching hours. If you are a Chief Audit Executive, an internal auditor, or a risk professional, this is for you, because often there is a gap between what the Audit Committee thinks they asked for and what internal audit believes they delivered. Let's close that gap right now. Over the next couple of minutes, I will walk you through the 5 core expectations that every effective audit committee has for its internal audit function. We will cover independence, risk coverage, quality of execution, communication, and finally, organizational value. By the end of this session, you will have a clear roadmap, not just a checklist of standards, but the unspoken nuances that board members discuss behind closed doors after you leave the room. Let's set the stage. The Audit Committee sits in a unique position. They are responsible to shareholders for financial integrity, internal controls, and risk management. But they are not in the building every day. They rely on 3 lines of defense: management, risk functions, and external audit. But there is one function that acts as their eyes and ears: internal audit. Here is the truth. Most committees respect the technical skills of internal audit. But respect is not the same as trust. Trust is earned when internal audit consistently meets expectations that are rarely written down in a charter. The number 1 unspoken expectation: no surprises. If the audit committee learns about a material weakness or a fraud from the external auditor or a whistleblower before hearing it from you, you have failed. Not because you did bad work, but because you broke the chain of trust. So let's dive into the 5 pillars of expectation. We will start with the most fundamental: independence and objectivity. Pillar 1: independence and objectivity. The Audit Committee expects that internal audit is functionally independent. That means your reporting line is paramount. Let me be specific. On paper, many internal audit functions report administratively to the CEO or CFO and functionally to the Audit Committee. Here is what the committee actually expects in practice. First, they expect direct private access. You should not need permission to speak to the committee chair. If something urgent arises, you should pick up the phone. No gatekeeping, no filtering through management. Second, they expect you to push back. A non-independent internal audit function simply validates what management wants. A truly independent one challenges management respectfully. Here is a test the committee uses silently. When the CFO proposes a change to a revenue recognition process, does internal audit just update their test plan? Or do they stop and ask, why are we changing this? What risk are we introducing? The committee expects the second behavior. Third, they expect you to manage non-audit services carefully. If you are building internal controls for management and then auditing those same controls, you have a conflict. The committee expects you to draw a hard line. Finally, and this is crucial, budget and resource independence. The committee expects to approve your budget and your audit plan. Why? Because if management controls your budget, they control your priorities. If management asks you to cancel an audit of a risky new product launch to save costs, the committee expects you to come to them, not to complain, but to inform, here is the risk we would be accepting if we cancel this. In summary for Pillar 1, the committee expects you to act like their trusted advisor, not management's consultant. Be objective, be brave, be accessible. Let's move to Pillar 2, risk coverage and agility. The traditional audit plan is dead, or at least it should be. The Audit Committee expects that your audit plan is not a static document created 6 months ago. In today's environment, with cyber threats, supply chain chaos, and regulatory changes, the risk landscape shifts weekly. The committee expects your plan to shift with it. Here is what they expect: a dynamic risk assessment. They want to see that you have a process to continuously scan for emerging risks, not just once a year, but quarterly or even monthly. For example, if a new AI regulation is announced, the committee does not expect a full audit next week, but they do expect a memo within 15 days saying, "Here is how this impacts us, and here is when we will audit our compliance." Silence is the enemy. Second, they expect you to cover the blind spot. Management naturally focuses on financial reporting and operations. The committee expects internal audit to look at culture, ethics, and third-party risk. Things that fall between the cracks, specifically cybersecurity. The committee is losing sleep over ransomware and data privacy. They do not expect you to be a technical hacker, but they expect you to audit the governance of cyber. Ask the tough questions. Do we have a response plan? When was it last tested? Are we patching critical systems? Third, they expect you to be agile enough to stop what you are doing. If a fraud allegation comes in, the committee expects you to drop a low-risk audit and pivot immediately. If you say, "But we already allocated our hours," you will lose credibility. Pillar 2 takeaway. The committee wants a radar system, not a history book. Don't just tell them what went wrong last quarter, tell them what is about to go wrong next month. Now, Pillar 3, quality of execution. You can be independent and cover the right risks, but if your work is sloppy, you are useless to the committee. The Audit Committee expects professional skepticism, not cynicism, skepticism. There is a difference. Cynicism assumes everyone is lying. Skepticism says, "I will verify before I trust." What does this look like? It means you do not accept management's representations at face value. If the controller says, "We fixed that control," the committee expects you to retest it, not sample it, retest it, and provide evidence. Second, they expect root cause analysis. A finding that says employee did not follow procedure is a superficial finding. The committee wants to know why. Was the procedure unclear? Was there pressure to meet targets? Is there a training gap? If you do not fix the root cause, the error will happen again. Third, the committee expects actionable recommendations. Here is a common frustration for boards. Internal audit finds a problem and recommends improve internal controls or enhance oversight. That is not a recommendation, that is a wish. A good recommendation is specific. For example, implement a segregation of duties matrix in the ERP system by Q3 with manager-level approval for overrides. The committee expects to see ownership, due dates, and metrics. Finally, quality means no material misstatements in your own work. If the external audit finds a control deficiency that you missed in your last audit, the committee will notice, and they will ask, "Why didn't internal audit catch this?" The standard is simple. Your work must withstand scrutiny from the external auditors and regulators. If you are not sure, ask a peer to cold read your report before it goes to the committee. Pillar 3 summary: be skeptical, find the root cause, give specific solutions, be accurate. Let's talk about Pillar 4, communication and reporting. You have done great work, but if you present it poorly, it does not count. The Audit Committee expects you to translate audit jargon into business language. Do not say control deficiency in the procure-to-pay cycle. Say, we found that 15% of vendor payments lacked a second signature, exposing us to a $2 million fraud risk. The committee is composed of busy people. They are not auditors. They want risk in dollars, probability in percentages, and impact in business terms. Second, they expect a clear risk rating. Every finding should be ranked: critical, high, medium, low, and they expect you to defend that rating. If you call everything high risk, nothing is high risk. Be calibrated. Third, the committee expects an executive summary, no more than 2 pages. The first page should answer 3 questions. What did you audit? What did you find? What is management doing about it? If they need more detail, they will ask for the full report. Fourth, and this is where many internal audit functions stumble, management action plans. The committee expects you to track remediation to closure, not just report the finding and walk away. They want a quarterly status update on open issues. If management says they will fix something by December, and December comes and they have not fixed it, the committee expects you to escalate. Here is the golden rule of communication. No adjectives, just evidence. Do not say, management is being uncooperative. Say, management has declined to provide requested documentation for 3 consecutive weeks. Emails attached. Let the committee draw the conclusion. Finally, the committee expects an honest assessment of the control environment. A satisfactory rating every quarter is suspicious. Great internal audit functions report on a spectrum. Sometimes the answer is, this area needs significant improvement, and here is our plan to help. Pillar 4 takeaway. Be concise, be factual, be transparent, and always tell them what keeps you up at night. Pillar 5, adding organizational value. This is the ceiling, not the floor. Once you have mastered independence, risk coverage, quality, and communication, the committee expects you to be a strategic advisor. What does value look like? It is not cost savings from finding fraud. That is table stakes. True value is foresight. The committee expects you to benchmark. How does your company's control environment compare to industry peers? Are you leading or lagging? Bring data. Bring external perspectives. Second, they expect you to identify efficiencies. Sometimes a control is effective but costs too much. The committee expects you to say, we can reduce this manual review by automating it, saving 500 hours a year with the same risk mitigation. That is value. Third, and most importantly, the committee expects you to advise on emerging risks before they become crises. For example, if you see that your competitors are being fined for ESG reporting failures, do not wait for the regulator to call you. Bring a memo to the committee. Here is how we can proactively audit our ESG metrics. The highest compliment an audit committee can give you is not "you found a mistake." It is "because of your work, we avoided a mistake." So, how do you demonstrate value in every meeting? Provide a what's next slide. Do not just report on last quarter's audits. Say, based on what we learned, here are 3 risks we will audit next quarter. Be forward-looking. The committee expects you to be a catalyst for positive change, not a police officer, a partner, a trusted advisor who helps the organization achieve its objectives while staying safe. Pillar 5. Summary, don't just count the beans. Help cook the beans better. Provide insight, not just inspection. Let's bring this all together. Just now, we have covered 5 critical expectations. 1. Independence. Be accessible to the committee and willing to challenge management. 2. Risk coverage. Be dynamic and cover blind spots like cyber and culture. 3. Quality. Be skeptical, find root causes, and give actionable recommendations. 4. Communication. Translate risk into business language. Track remediation. No surprises. 5. Value. Be forward-looking. Provide insight, not just inspection. Here is your action plan for tomorrow. First, schedule a private meeting with your audit committee chairman. Ask him or her one question. What is one thing you wish we did differently? Listen. Do not defend, just listen. Second, review your last 3 audit reports. If they are longer than 10 pages, rewrite the executive summary to 1 page. Third, look at your audit plan. If it looks identical to last year's, challenge your team. What risks are you ignoring because they are uncomfortable? The Board Audit Committee does not expect perfection. They expect progress. They expect honesty. And above all, they expect you to be their most reliable source of truth. Thank you for your time and attention. If you found this e-learning video is useful, please feel free to subscribe to this channel and share it out with your friends and colleagues. Thank you and have a great day ahead.